Do I have some familiar faces out there right now? You guys can type, right? You good out there? How are you, everybody? Wrong, Paul. Hey, Paul. You can hear me great? All right. First off, you're going to love this. I have to apologize. You wouldn't believe what's happening right now. I turned my mic on, and the landscaping crew has pulled up to my house. I'm in my front office of my house. So you're going to hear noise, and there's actually going to have to be a moment where you are going to, I'm going to have to turn off the mic for a minute when they get real close. I don't think I can stop them, so I'm just going to have to go, all right? Yeah, you can probably hear a little background right now. Hopefully you can still hear me okay, though? Are we good? I'll just speak a little loud when they're here, and it'll be gone soon. Okay. You guys should see a slide up right now that says the TradingPub's Trade-a-thon? You guys, can you see that okay? All right, great. Well, before I get going, we're going to look at a lot of charts today. I heard this is I've never talked at this trade-a-thon before. So I did something new for you guys, and I hope you guys will appreciate it. Let me ask you guys something though. First of all, let's make a little deal here. I'm not going to sit here selling you anything at all. I'm here to sell myself and to sell Pristine, because that's who taught me to trade 15 years ago. So I'm just going to talk and answer you guys a lot of questions. And if you like what you hear, you'll probably look us up, and if you don't, you won't. So I promise you, I'm going to give you, naturally we're here, and I do have a couple of slides I want to show you at the end, but I'm not going to take it more than about 2 minutes of your time. Does that sound good? And in return, how about you guys ask whatever questions you want to ask, and I'll try and deal with them, okay? Sound good? But let me ask you guys something first. There's a lot of you here. Why are you here right now? What are you looking to get out of this? There's a whole lot of you here all day long, all afternoon, listening to various people talk about trading concepts. What are your expectations? Seriously. To pick our brains? All right, that's a good one. Of course, for the most part, I don't see a lot of questions being asked. It seems mostly you're being talked to. You're just to listen? Okay. Obviously, you have some expectation you're going to get sold something, right? Because that's what most people are here doing. You're trading at a time, want to know what others do. Okay, all right. So open your mind. Those are good reasons. Open your mind to other concepts, ideas. Okay. Okay. Tell you what, I'm going to share everything I can with you. I hope you all understand that I could talk for maybe, I don't know, 100 or 150 hours about trading concepts. So what I give you today is going to be just a little fraction. And I do want to warn you that I think that if you are very new, that hearing something like this can be dangerous to you. Does that make sense? That if you're new, if you're really brand new to this, because most people lose when they start trading, right? Trading, investing, right? But does that make sense that it could be dangerous to sit here and hear something like this and without really fully understanding it? So I'm going to leave that up to you to figure out for yourself. But let's get going. I'll show you what I'm going to take a look at today. I want to remind you, this is our little disclaimer side, that of course you can lose money trading or investing, and I also want to remind you that some charts I'm going to be showing you today are charts not recommending things in the future, but charts about things that happened in the past. Okay, we all know that. Today's agenda, we're going to look at some trades. Now, typically, I like to, when I talk in Pristine method, at Pristine to groups, I typically like to take stuff right off the chart that day and talk about it. The problem is, I had to kind of prepare these slides ahead of time and get them approved and blah, blah, blah. So I did this all on Wednesday. So these are some trades from Tuesday, okay? Now that being said, I don't want to come off like some schmuck up here. I don't know if you're trading today. I had a rough morning this morning. I'm glad I'm not showing you from today. I can review some stuff if you want. But I had a rough morning. I had a short that didn't work. I had 2 longs that hit targets, but small targets. And then I went long at lunch and got killed on a couple things. Well, I killed, I mean, it's a normal loss, but I took 3 or 4 things that didn't work. And right now, I just, about 45 minutes ago, I went long the Russell, the IWM, around right at 112.00. I went long forward, right just off the low of the day. So that's what I have going on. But as of right now, I'm down for the day. So it's something you have to understand, folks, that trading is not about guaranteed success. It's about odds. And there are days you play the odds and sometimes they don't work. Today was at lunch going long was a good odds on day, and we had an unusual move down in the market, well, at least what I consider unusual. Does that make sense? So I'm going to, and what I had short this morning didn't work. Would you believe that? So I'm going to go through and we're going to take a look at some trades, but these are going to be some things from Tuesday, and we can talk about something today if we have time. And then I want to, as I look at these, I want a picture of a chart, right? Because you can see pictures of charts all the time, but I'm going to show you the concepts that I'm looking at. But I want to get a little personal and show you exactly why these trades are mine, because there's this misconception out there that, you know, you're going to read some book or read a magical strategy and you're going to be rich. And that's not how it works for those who've been around for a while. It's about really perfecting what you do. And we call it a Pristine. We call it making it your own. Does that ring a bell with anybody? Sort of making it your own. In other words, two traders can have the same strategy, the same general concept in mind, and one can make money and one can lose money. You see that all the time because of just exactly how they execute it, how they manage it, and if they even do it or not. I also want you to think about this. What makes these a trade? As you look at these charts, I'm going to show you what makes them a trade. And how do they have an edge? I'm going to show you on each one, but think about for yourself, because you may not recognize it because it may not be things that you do. And then as we go along, there are some truths I'd like to share with you. These are truths, and I don't know how many of these we're going to have time to talk about. Again, I could talk about any one of these for an hour or more probably, but I'd just like to, as they come up or if you have questions, as you look at my charts, you're going to see they're very, very clean charts. They do not have much on them at all. I don't use technical indicators. We'll talk about that a little bit on a slide. The concept of backtesting is a misnomer. The way most people look at backtesting, where you have a formula and you backtest it for the last 12 years, it doesn't work. Backtesting concept should involve backtesting your own trades that you took in terms of different changes to your strategy and or to your management system. It's another fallacy out there. There's no such thing as black boxes for those of you who are looking for the magic formula. They don't exist. They exist, but I mean, they don't work. The biggest thing for traders, and again, these are just quick little blurbs we can talk about as we have time. I feel that most traders come to the market and lose money because they're all looking for a holy grail. They're all looking for this magical formula, piece of software, something that is going to make money for them. It doesn't work that way. Trading, believe it or not, you ready for this? It's like any other profession. You study, you work hard, you make mistakes, you get better, and you get good. Does that make sense? Is there anyone out there that wants to challenge me on that? Is there anyone out there? Make sure you're on the slideshow tab, all right? Make sure you're on slideshow. Everyone else has it there, Sven. Anyone want to challenge me on that, or do you agree that trading is no different than any other occupation out there? Doctor, lawyer, architect, engineer, whatever it is, you study, right? You learn, you practice, you get better, and that's what it is. So all of you that are looking to be millionaires overnight by learning some secret formula, it's not going to happen, okay? It's more fun. It's more fun, though, only if you make your living at it, though, right? And another thing that's been a very common thing lately is what I call reverse engineering. We see this all the time at Pristine. Clients come in for free. And naturally, I understand, you guys want to learn how to trade for free, and everybody does. But I don't care how much you listen to presentations like this or workshops like this, you're simply not going to learn the information in a proper way that's going to sink in with you. And what a lot of people try and do is they try to see huge moves in the market or great trades somebody did and go back and figure out, what they had in common or how they did. I mean, it doesn't work that way. You don't go looking for stocks that had really huge moves and go back and try and figure out why they had a huge move. Sometimes they just have huge moves for no reason. It's about odds. It's about finding a particular setup, a certain niche, if you will, in the market where you're comfortable, you play it, and the odds are you're going to have a good move up or down from that area. That's what it's all about. All right? Just don't say it's cool, Diane. Don't say what's cool. Well, I think I just did a pretty good job saying it's not cool. No, I'm letting you know. I think trading is something you have to learn. It can be difficult. First of all, real quick, at Pristine, who are we? We're a worldwide leader educating traders. I just want to tell you who we are. It's going to take 30 seconds. Greg Capra, our founder, 6-year Trading Expo Challenge winner. Pristine has been around for 20 years, training everybody from hedge fund managers to market makers, people who've never owned a stock, and people who are brand new to the market are some of our favorite clients. We were the recipient of the 2012 and 13 Best Trading Course Award, 2013 Best Trading Room, and 2013 Best Letter, all from TradingPub, voted on by you, the trading public. Probably a lot of you here voted for that, and it's a very big honor we're very proud of. And we also are Lightspeed's preferred trading educational provider. And due to that, there are all kinds of benefits that you can receive from that. I'm not going to stay on this slide long, so if you have any issues or you want to find out more about any of these, all the stuff you get from joining the Pristine community, and also through the preferred broker at Lightspeed, you can email us, and you'll have plenty of time to do that later. Okay. And I am a 14-year Pristine trained trader investor. I am the lead moderator in the Pristine Method Trading Room, head of the Pristine Research Department, author instructor of Advanced Gap Strategies, author instructor of Advanced Management Strategies, author instructor of the Wealth Building Program, all at Pristine courses that you can take if you're there. I'm going to try and keep up with your questions, but if you get too many, I may have to just kind of come back to them there. Okay, got it, Diane. Lightspeed is a brokerage. They are one of the biggest. They were nominated the best brokerage for 2013, and blah blah blah. A whole lot of good stuff about them. No time for that now. Okay. So here's our list, and here we go. First of all, one thing that's very important, guys, is preparation. I prepare for the market every day because I have certain strategies that I look at that I want to see happen, and I look for setups that give you the possibility of that happening. I actually would like you to think, if you would, guys, why any strategy you have, and in this room there are probably people who really have no strategies, people who read a book and have strategies, people who some of you maybe are from Pristine, maybe some of you are from some other educational place. Whatever you have, I like to think of every strategy as having 3 integral parts to it. Okay. The first part is that you want your setup to have some kind of picture of power. We talk about 4 different types of pictures of power Pristine. Something that's going to get it moving. Something that's going to be one of the stocks that moves for the day, not just sits there sound asleep, right? Second, you have to have the proper time frame of focus. In other words, setups that occur on the daily chart, you can't come down to a 2-minute chart and expect the momentum from the daily to necessarily take you forward on a 2-minute chart, not if it's not timed right. And third, we talk about having a great entry. The entry is everything. It's something I believe in very much. The entry determines so much of your trade. And many traders don't understand many things about entries. Naturally, most people know it determines your entry, your stop, therefore your risk reward to some extent. But also an entry should be the thing that keeps you out of a trade whenever possible. Okay? So this is part of the preparation I do, is I prepare a watch list every day. And this is what I actually give to the Pristine Method Trading Room, since I run a room during the day. Rather than just putting on my platform, I also put it in a sheet and send it to people. So there are daily watch lists from the daily charts, and also gapping stocks that day, because we focus somewhat on gappers too, because of the great opportunity that they can provide. All right? Also then, of course, while that is done about 9 o'clock in the morning, by the time the market opens, we're underway, other things come up. More gappers come up, different things happen. And this is what my trading platform looks like at a sample like around 10 o'clock. The lists start to fill up. The top of the green and the red lists are the daily things you saw. The white lists are gap up and gap down. My hot list in blue, a follow-up list in yellow. And these become my working stocks, the ones that I look for. And then throughout the day, I'm also scanning. We have a scanner called ESP Scanner that I continue to add to these as the day progresses, always trying to find and have in front of me the best possible equities to hopefully magnify any move in the market that's happening. Okay? So with that, a couple of things on the list that day. All right, time out 1 minute, guys. Hang on. Time out. Okay, I think I'm back. I may get interrupted once more, but they just took a pass by the window here. You wouldn't be able to hear me. Yeah, I actually do mostly, I do all equity or futures trades on the market itself, because sometimes I'm, like right now, the IW I'm going, and actually it's almost at a target there on IWM. That's what I do, yes. Okay. So Tuesday. One of the things that I want to tell you that I focus on, I'm going to start talking about this kind of me personally because we personalize things. And everything I'm saying about me, it's all what we teach at Pristine. One of the big things there is quality of a chart. Okay? You see, this is a 60-minute chart of Intel, and this is going into Tuesday here. And this is just a very beautiful chart. And what we want to focus on, guys, we want to focus on charts. Let me draw an arrow in here if I can. You know, in these areas, when you have these beautiful, beautiful trends that develop like this, okay, all the way through here, this has been a beautiful trend. If you notice back earlier, if you look back in here somewhere, you notice the pattern is not as clean. Do you see that? There's no picture of power. There's no movement. We're just kind of drifting sideways. And then we want to be involved in stocks when they start to have moves and precise, clean. This is what we call a clean pattern. And this is the morning I was looking at. Does that make sense, guys? When I'm just, without, you know, I don't obviously have time to go through hours of the technical things I'm looking at, but just in terms of a clean pattern, this is a very clean chart. And we come down, and one of my strategies that I like to do is I am very big on multiple time frame and really great entries, okay? The pullbacks, yes, that's true, Paul. It's kind of like saying, you know, go to a good school. What does that mean? It's very critical because some of the pullbacks are not good pullbacks. It depends what you have. And all of it doesn't matter if you don't know how to get in and make it work. So this is one of the things that's on my list this morning. Exactly, Paul. So this is one of the things on my list this morning. This is the hourly chart of Intel. What else is to say here? This is played long shortly after. I'm going to show you another chart on Intel so you can see where the entry actually was. But the point of it was that, right, Paul, this was on my mind to play at the open because of this setup, because of this right here, because of this pullback. I was interested in playing that long before the market opened, right, just as soon as we opened. The edge is multiple time frame analysis. The edge was that this hourly chart was going higher, period. And as long as the market wasn't going to take a big tank that morning, the chances are that Intel would do well. This play, there's a post, you know, I'm talking in the room, we put like, you know, official posts in there so people can see what I'm doing. And you can see that this play was called at 9:31 in the morning. It was over 26.40, stopped 26.34, okay? Well, Hashan, that's a great question. He's saying, why didn't I buy these? This was on my list this day too. I just didn't get it. You know, it didn't give me the right setup at the time, or I had another stock in mind. Sometimes, you know, you can't do everything. And there's some days where I may have a list of 7 or 8 things that I really like, but I can only do 1 or 2 of them, right? So it just didn't make it to the top tier that day. But these are all possible setups. And that's where I think you get your odds, Jiz, is that if you continuously keep 10 or 20 of the absolute best things out there, all things that you would want to trade, and then you're picky enough to say, wait for the best 1 or 2 of those, that's where you get your odds from, okay? True, that is true. Actually, I wasn't getting into Tony, but Tony has a good point that Tony Long, that's almost a great name. It wasn't quite as clear this day. This is a more established pattern. So what happens? We come down now to the 1 minute chart and we gap down that morning. Now, understanding the pattern, understanding the morning, gapping down would probably open on the low. So I was very aggressive about coming in here. And this is a 1 minute chart. Now, I'm not a scalper. Okay, that may sound funny because you're saying, Paul, you have a 1 minute chart up. I'm not a scalper. I take my strategies. I like day trades. I like to hold things for half a day, a day. I like strategies that come off the 60-minute chart, 50-minute chart. But while the strategies come from those time frames, I like to get entries that are more fine-tuned because I actually feel, I don't want this to sound wrong, but I feel that I'm good enough that I can come down and get a really cute little entry on some of these. And that's what I did on Intel. So Intel, soon after it opened, I took an entry right inside of that 1 minute bar right there. You see where that arrow is pointing at? Now you may say, how do you take an entry? Well, you notice one of the edges I put up here is SSS, a secondary sign of strength. In other words, inside of that 1 minute bar, there are things going on that can give us a good indication of what we call a secondary sign of strength. In other words, what we don't want to have happen is for the stock to start rallying, us to get in, and for it to collapse, right? So a secondary sign of strength just means it's an indication that it moves up, it has trouble, and then it's able to move up again. And there's various forms of secondary signs of strength. Some of them actually become strategies, like ribbies and 1, 2, 3s are all actually secondary signs of strength. So these are the patterns, you know, that we look to play because they give us increased odds. So look, So look what we've done. We come from an hourly chart to a 1 minute chart trying to find, the perfect entry, if you will. Targets are taken 26.54 and 26.64. Notice the stock went a lot higher. And this is all, all happened by 10:10 in the morning. Okay, not everything's like that. This is just one particular trade that happened to be that morning. Okay. Questions? I still see the Dan. I'm sorry. I mean, maybe somebody from Traders Pub here could help Dan. The rest of you guys, you're seeing a 1 minute chart of Intel. Could I get a couple of yeses? TE, that's exactly right, TE. You buy low. Isn't that great advice? You buy low and sell high. Yes. You buy low, sell high. You just have to know what low and what high. How do you take and manage trades you took? What was your entry? I just gave you all that jizz right there. I just gave you all that. Management varies from trade to trade, but I am generally using a more laid-back system of management because most people overmanage to their detriment, right? Most people overmanage. Most people overmanage to their detriment. The stop targets, entries, and exits are all up there. Okay. So let's take a look at another one from a little bit later that morning, just shortly after Intel. The next trade was TMUS, T-Mobile, TMUS. And again, we have what I call a big picture of power. The big picture of power that came. What's the picture of power here? Well, this is the daily chart of TMUS. Oh, I'm sorry, it doesn't say daily chart on here, but this is a daily chart. It should say that up here. This is a daily chart of TMUS. And you notice the picture of power here again. Again, this is a sideways trend, not an uptrend, and we came to a very strong support area in a higher time frame. Again, an edge, multiple time frame analysis, being able to say before the market opens, hey, look where this stock is. If we test this area again, it's probably going to hold, right? Make sense? So it's the same concept. And then once this is on the list, and again, keep in mind, you saw my watch list, as I showed them to you. I have several things on there. This wasn't the only thing I was watching. But this thing did something that made me want to get in. The edge was multiple time frame analysis. The edge was secondary sign of strength. The edge was also reversal time. What are reversal times? Well, let's look at it on this next chart. The entry here is 30.44 by 30.30, and you'll see the entry here on this next chart. Again, we're on a 1 minute chart, and we're free falling. We're free falling, right? And the entry on this was playing it over that little topping tail right there. See that little topping tail? See it right there, guys? Right there. That was the entry. Now, one of the rules we have at Pristine is that with only one exception, you never buy a free-falling stock. You don't play against the trend. There's only one exception. That's that we follow 90-some% of the time. There's one exception to that. What gave me the right to buy this free-falling stock? Don, I'll get to you in just a second with that. Yeah, the moving average is a 20 on there. That's Diana, that's a moving average of a 20. And while I answer that question, my question was, what gives me the right to buy this free-falling stock? Let me point out a couple of things. These are the charts right off my platform. I don't know if your charts look like this, guys, but notice that there's volume down here. Notice that there's I typically have two moving averages on here, and there's candlesticks, and that's all there is. Did you notice that? Did you notice that? That's it. That's all I have. I don't have anything else on any chart anywhere on my platform. I haven't for years and years and years and years and years and years. Because you know why? This is what you need to make money. Relying on other junk on your chart is a crutch that usually costs you money. Okay? And this is a 1 minute chart, Diana. So nobody had an answer for me. What gives me the right to buy this free-falling stock? Well, yeah, I'm not buying a downtrend, right, Fred? I'm not buying this downtrend. That's not what I'm buying. What I'm buying is this major support on a sideways daily chart, right? That's what I'm buying. I'm playing not a downtrend. I'm playing this sideways trend. Where am I going to enter that? Well, in order to enter that, I actually feel that I know this pattern well enough from playing it all the time that I can get in as soon as I get a secondary sign of strength. Something else that was a critical part of this trade is what we call reversal times. Are you guys familiar with reversal times, intraday reversal times, yes or no? Huge. If you are, you're familiar with Pristine, because, well, at least we've been teaching them forever. If you're trading, hey, Johnny Lee, if you're trading without reversal times, you're giving up one of the biggest edges you can have on an intraday basis. It's unbelievable. Let me just do this rather than lecture you about them. What I want you to do, guys, I want you to go through and I want you to draw vertical lines at 10 and 10:30. Print up some 5-minute charts of any symbol you want or the market and go through and draw vertical lines at 10 and 10:30. And I want you to draw the line through the reversal at that time. It may be 5 or 10 minutes off. It doesn't matter. But just whenever the stock reverses in that area. And you will have drawn the line through the high or low of the day more than half the time, and the high and low of the day of at least the morning 75% of the time. It is amazing. It's amazing. So that was part of the consideration, and we're in the support area. So now any little sign of strength. So coming off this topping tail means that buyers pushed it up. The bears came in and said, nope, you're still going lower. The buyers refused to let it go lower, and then we took out the prior area that the bears held. That's a secondary sign of strength, and that's all we needed for the entry. Entry 30.44, stop under 30.30. Notice that with that stop, do you see how much room this had? In other words, this could have jiggled down, and still it could have gone all the way down to here before it stopped out. So it had a lot of room before it was going to stop out. And then targets taken at 30.95 and 30.69, about 2.2 on the reward to risk average out. Okay. How do you determine support and resistance in the chart? There are many ways to determine. Yep, Jiz, again, this answer I could literally talk for 3 or 4 hours on because you've probably seen support all the time where you blow right through it like nothing, right? And you've seen resistance where you blow right through it like nothing. And this is something I talk about on the next slide, actually. Your question I'm actually going to answer on some verbal comments on the next 2 slides. But what it comes down to is most people don't really understand, what really is support and resistance. What areas should be respected, which should not be respected, which should hold and which shouldn't hold. We're all used to this, for lack of a better term, this Mickey Mouse concept of technical analysis, or somebody says to you, oh, look there, there's a moving average, the stock will bounce. Look there. There's another low, the stock will bounce. And for the most part, that's Mickey Mouse. I mean, it doesn't work that way. It's a little more complicated than that. I'm not saying it's rocket science, but it's more complicated than what a 5-year-old can understand. And simply looking anywhere in the world and saying, oh, there's a prior low, we must bounce, it doesn't work. There are different degrees of support and resistance. There are different ratings of support and resistance. Support and resistance is handled differently depending upon the power of the pattern you're driving. Does that make sense? Somebody's saying echo. I don't think there's an echo. Okay. The support and resistance will vary depending upon the time since you've been visited, right? It'll also vary depending upon if it's been attacked before. Does all that make sense, guys? So there's no simple answer to just say what is support and resistance. Again, it's a study, not a hard one, but needs to be made. That was a good support area, okay? Yeah, those are all, RB, those are all reversal times. Yeah, 10 and 10:30 are the 2 key morning ones. And usually either one or the other is in play, RB. It depends on the prior pattern going into the chart. But sometimes they're both in. Sometimes you see the high and low set for the day at 10 and 10:30, okay? Boom, 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 boom. Okay. So that was the Intel play. And again, I'm just showing you various concepts. That these are my favorite type concepts. Multiple time frame analysis, getting a strategy from a big picture, and then coming down and really getting a micro type entry that can deliver a good profit. Does that make sense? Next slide. I have a couple of written slides. We're going to look at 2 more charts. But before I get to the charts, I just want to take a little break here, and I'm going to read this to you. I don't like to read stuff to you, but I think I worded this well, and I just want you to, out of all the people here, and there's a ton of you here, if 10 of you hear this and go, wow, that kind of clicks with me, I'd love it if you tell me that, a little light bulb moment or something, and if not, if it just clicks with you, that's great, because it could help you. I've been sitting in front of the market for almost every minute for 14 years, and in order to make money, I do whatever works. If you've not discovered the fact yet, listening to news or researching fundamental data is not only a waste of time, it's actually very detrimental. It can only give you an incorrect preconceived bias and ruin your trading. But that topic is not for today. Technical indicators have a very limited role. They can be used for scanning to filter out or to look for certain price action, but they can never be used as a strategy or as a basis to enter a position. Never, period. They simply don't work. Wait until you see the actual charts that we use. Well, you saw my actual charts already. You see that little picture to the left there, that actually is off somebody's screen at one point. It's just, it does not work. It's that simple. If any technical indicator worked, people would use it. There wouldn't be 600. And I would use it. I'm not an idiot. If something worked, I would use it. I mean, it's that simple. Nothing works. Nothing in the technical indicator department works. We get the odds. What gets the odds in your favor? What we believe works in learning to read where prices are really going. What we believe works is learning to read where prices are really going. There's only one truth in the market, and that is every time a transaction occurs, it hits the tape and becomes part of a chart. A chart cannot lie. And that is true, folks. All of the stuff you hear, all of the rig market and HFTs and nasty market, all that stuff, there's one thing that does not lie in the market, and that is when prices trade, they hit the tape and it hits a chart somewhere. Okay, that is something that has to be true always. A chart tells us where big money is going. Big money is not chasing all stocks all the time. That's the secret. Find chart patterns that are screaming at you, that tell you that they are going somewhere. Most never learn this. In other words, technical analysis does not mean that you should be able to pick up any chart in the world and make this magical prediction about where it's going. And that's where a lot of people lose faith in what they learn or don't understand it properly. Technical analysis is to understand there are certain patterns that happen, things that occur. And when you find that pattern, you have great odds. Did you see the difference? Does that make sense, everybody? That there's a difference between just picking up any chart and predicting where it's going to go and looking through several charts to find one that is a pattern that you know already. Does that make sense? That's a real question. Does that make sense? Do I need to explain that more, or are we good? Because it's a huge, one of the huge secrets to me about trading. It just is. When I realized that a long, long time ago, things became a lot easier. We're what we call pattern traders at Pristine. That's what we do, is that we have certain patterns and we wait for those patterns to come to us, and then we know what's going to happen, right? It's like we already know the answer. Like if you want to be the smartest guy in the world and you went out there in front of an audience and said, well, throw questions at me, maybe I'll get some of them right. Or what if you could supply the audience with 100 questions which you already know the answer to? If you already know the answer, any question's easy. And it's the same way with chart reading. If a pattern comes at me that I know the pattern, I know where it's going. You throw something at me, it's just a mess, just a bowl of spaghetti. I'm not going to know where it's going. I'm not going to pretend to. Does that help clarify it? To find chart patterns, you need to learn strategies. There are certain patterns that repeat themselves over and over, and there are many price actions that are very readable, just like reading a book. When you find consistent patterns and learn to trade them, you are trading with a strategy and you have an edge. If you have not discovered this, you never will. What's the problem with people who try to learn technical analysis? Most traders never even really try to learn it, right? They just think that it's a waste of time and that you don't need that. Those that do try to learn it think that a book or a CD or maybe talking to somebody for a weekend is all they'll ever need. And even those that take it more seriously often get one of several other hang-ups. What are the hang-ups that people get? And this is where probably I'm going to hit a lot of you in the room listening maybe. You know, you've done some studies and you've read some things and you've listened to some people. But here are the hang-ups that can happen to traders. Most traders never really learn technical analysis properly. If you would hear one of our instructors teach a class, if you never have, I think you'd be amazed at the stuff that we talk about and the stuff that we know. It's amazing what most traders don't know that they don't even know, if that makes sense. You may have learned it at one point, but you forgot it. You may not apply it right. I mean, a lot of traders learn something conceptually in a book, but they never apply it right. If a trade doesn't work, why did it not work? There's a couple of reasons. It could be a very good trade you took that just didn't work. Sometimes trades don't work. That's just the simple truth of it. Sometimes trades don't work. And who's to say whether you did the trade right or wrong, or if it's one of those that just didn't work? I mean, if you just learned it yourself, how do you know? How do you know all this, and who tells you? These are the problems that traders run into when they try and learn this, right? And for those who make it this far, most never advance beyond a certain level. they don't ever realize how good an education, or in our case, the Pristine method is, because it really works. Most get stuck on one concept they boiled it down to. Technical analysis down to just one or two things, and they look at it in a vacuum. In other words, a lot of traders try to trade by just learning one thing. You know, retracement concept, Fibonacci, a moving average, support, resistance. And they just think that one thing in a vacuum is all that you need to trade. But the truth of it is technical analysis is blending a dozen different terms together, a dozen different looks at a price pattern together to give us the best possible odds, of what's going to happen. Let's go on and take a look, a couple more from the same day. This is GNW, and this was the daily chart of GNW. Is this starting to look a little bit boring to you? Consistent patterns, right? Do you see the GNW concept here? Right? What was the edge in GNW? Multiple time frame analysis. Here we come, and we're falling down into a very strong support area, right? Both minor and major support, the way we label it at Pristine, right? This should be getting boring by now, right? So in the morning of that day, we're going to come down, we're going to retest that prior area. Here's the 5-minute chart from that day. So in the morning, we open, we fall, we retest the prior low, we retest it again. Coming out of here, we find our entry. Entry 1685, stop 1670, and take it to targets of 1719 and 1729. Very conservative targets. Even though the daily chart is in play, we're not really playing necessary for the daily chart to go to new highs or anything. We're just using the power of the base to find a good intraday trade. Now, I like swing trading. It's just a very tough market for swing trading. This whole year, I'd only done one swing trade until a week or two ago. And the ones I tried since then, I had a hard time. I tried a couple. I haven't got one right yet because it's a very choppy time right now. And I want to show you a completely different, what a difference today makes. Today, wonderful short signals. Yep. Let me show you a completely different one, because here's a different picture of power. You've seen a similar picture of power so far, that multiple time frame analysis, a bigger, higher time frame lining up with the intraday patterns. Here's a different chart. This is Nike from that same day, 2 days ago. Nike played long at 10:40 in the morning. The edge was gap analysis. Now this is a different play here. See, this stock gapped up a lot this day. And this was based on understanding gaps, which is kind of a little special niche in the market. Things that it's an area that a lot of traders like for a whole lot of reasons, because it's a fairly, when you learn gaps, it can be a fairly predictable concept. It can also be one that provides really big, fast moves very quickly, a lot of instant gratification. The Nike, whoops, I'm sorry, didn't even click there. Nike was played later in the morning, not right at open in this case. It was played over 72.64, stop under 72.45. Now there's the daily chart, and we're going to come down and look at a 5-minute chart this time, because we're in the afternoon. I'm sorry, I had the wrong time on that earlier. This is 12:40, not 10:40 in the afternoon. And here, once Nike opens and it rallies, it starts to set up an intraday support area, right? We start coming through lunch, and as we're getting ready to leave lunch, Nike starts holding and consolidating. So we simply played over that consolidation. And again, that was at 12:40, not 10:40. Wrong, maybe the wrong time zone or something, I don't know. And targets to 73.04 and 72.75. Now, this did not get big targets. It was played initially to the top of this base, and then it trailed out the rest of it. But just based totally on a very different concept this case, right? The concept of a gap giving us the edge to know where the stock is going, and then letting the stock on an intraday basis find where those buyers were, okay? TE, that was about 4-hour long trade. On which one there, Doc? And now I'm on. Oh, you're talking about something else. Okay, never mind. I thought you were asking questions about the presentation. There were a couple questions here I passed. I'm gonna grab now, and you guys let me know if you have some others about this chart or anything else. You had Somebody asked about pre-market. That's where I left off. There, Don, what emphasis, credence do you give to pre-market? Well, number one, it depends if there even is any pre-market. I mean, a lot of the stocks I look at, they're not all gapping stocks. So a lot of them, there is no pre-market to look at. Number two, if you're looking at a gapping stock, it probably is trading pre-market. And I'm aware of the pre-market patterns, highs and lows. But keep in mind, for most stocks, the pre-market is a very, very limited, low volume time that usually ends up not meaning a whole lot to the regular trading day. Okay, Don? Entering on a 1 minute chart, your risk must be very small. Well, Ray, that's an interesting question. Are you out there, Ray? Yeah, it depends what you mean by risk, Ray. When you say risk, what do you mean? Risk has a lot of meanings, actually. What specifically do you mean by risk? Do you mean the amount of money that you might lose, the odds that you might lose that money, the odds that would cause you to take a bigger loss than usual? I'll answer, regardless of what you're going to say, I'll go ahead and answer. The money you made, okay. Well, management and money management, Ray, are something that you have to figure out for what you want to do. But at Pristine, we teach a concept that all of your trades should have equal losses. Is your loss on every trade through share sizing, okay? So that's why I say it's kind of funny when people say, well, that was a small stop, it was a small risk. Well, that's not really right if you're trading what I call properly, because does it really make sense, Ray, for one trade to be worth $100 and one trade to be worth $1,000? Does that make sense to do that? It doesn't to me, because if you have a trade that you like so little that you only value it at $100, you shouldn't probably take it, right? So we equalize all the trades by share sizing to make them all have a similar risk amount, at least a similar risk amount, so they're all equal in that sense. So once you do that, Ray, every loss is a loss. It really doesn't matter what you started off with. Now, what I typically do is sometimes, if you're on a 1 minute chart, if you notice, Ray, that the 1 minute chart, I usually give things a lot of room. So if I'm on a 1 minute chart, I gave that one play about 3 times the room it should have needed, and it still is a relatively small stop amount. A consistent risk amount, but a small stop amount. Does that make sense? Yes, you would share size differently. I mean, you're right. Everything moves differently, right? Some things are very volatile, some are not. But that movement will translate to the chart, and that will translate to something that is very volatile. Will end up having a wider stop on the chart. Maybe you have to use a 30-cent stop, and something that's not as volatile or more liquid or smaller price may have a 5-cent stop or 10-cent stop or whatever it is. So that volatility shows up on the chart, and that translates to a wider or smaller stop typically, okay? And then you take that stop, and then you adjust your share size so that if you were to stop out, you will lose your $500 or whatever it is that you're doing, okay? Does that make sense? Okay. Because there are, unless you're in a very, very advanced strategy or concept, there are really no advantages to trying to give different risk amounts to different plays. And when you do that, Ray, I mean, you could theoretically, you could have 4 out of 5 winners and lose money for the day, right? Because the one you picked that ended up losing, you gave 10 times the risk amount to, and or lost 10 times the money on, and you end up losing money because of it, right? All right, and a couple more questions up there. Sorry, I had to scroll back and find these. Indicators are like driving in reverse. Yeah, I had several topics up there that I wanted to cover, and let me. One of them was using technical indicators, and we talked about that somewhat already. Technical indicators simply are not something that will give you an edge. You may take a while to find that out, but you will. Let's talk for a minute about the Holy Grail concept. What I showed to you today so far has been nothing that is like flashy, nothing like, wow, where can I buy that type of thing. It's just education. It's just knowing price patterns. To me, it's very much like learning a foreign language. If I showed you something in Spanish and you were American-born and never learned a word of Spanish, it would be impossible for you to make sense out of the paper I showed you written in Spanish, right? And you would look around and say, how could anybody possibly know or understand what this gobbledygook means? But if I showed it to somebody who was born in Mexico, they would read it as easy as you read English. And charts are the same way. Charts have a language all their own. And your goal to understand technical analysis it should be to understand how to read charts, so you can read chart patterns. And when I look at chart patterns, I feel I read them like just a clear book. And somebody else may look and listen to what I'm saying and say, well, I don't get what you just said. Well, it's because you don't know the language. You haven't learned the language. You're trying to read English and you only know Spanish or whatever language you want to use. Okay? Yes, true. Option talking about expectancy, your average gain per trade, and those of you when you get more into the numbers. Tracking numbers, tracking results is something that's very, very important, and something that, to me, it was a huge benefit to be able to track and understand exactly, what my trades are doing from a statistical point of view. Something very important. Black boxes, reverse engineering. Learning a strategy and learning how the charts work and how things come to you is what makes for successful trading. You cannot go out and just look at, all the time we people come and I'll get emails all the time and they'll pick on some stock that just flew off the chart the prior day, usually because of some news announcement. And they'll say, how could I have gotten in that? What do you think my answer is to that? They'll pick just some big mover at 2 o'clock in the afternoon and blast it off out of nowhere. It ran $3. And they'll say to me, how could I have, can the Pristine method show me how to get into that? What's the answer to that question? How do you get into that? The answer is you can't. Yeah, the answer is that you can't. You're not supposed to. It's not your goal. Our goal is not to just scour the countryside for things that moved already and then figure out what I could have done to been in there. It's possible. I mean, we look for pictures of power that can generate really, really big moves. We look for things that are giving us a clue that they're going to have a big move, but we're expecting that move when we're in for the move. Once the move has occurred, you don't want to be the person who's trying to chase something that already ran $2 or $2.50, hoping it'll go another dollar. It may go another dollar up, it may go a dollar down, but you're just simply guessing at that point. Okay. Questions? I think I'm caught up on all your questions. I just scrolled back down to the bottom. Ray, we talked about different risks, different sizes. To get a better risk reward, here's what you do to get a better risk reward. You can't to get a better risk reward. You can't just simply make your stop smaller. Mathematically, that gives you a better risk reward, right? Better reward to risk, I should say. Mathematically, it does, but the problem is that you'll stop out so much that overall you're not going to make more money. You can't just randomly decide to go for a bigger target because the stock is going to move what it's going to move based on your expectations, not based on what you need it to move to make money, right? So the only ways to increase your reward to risk are to devise an entry where you are entering sooner than you might have entered before, or to find stocks that are naturally going to have bigger moves, find price patterns. And that's why when I started talking to you, I told you about the 3 parts you want to see to every strategy. Whatever strategies you use, that first part you need to find a picture of power. We need to find something that's really going to potentially move a lot so that we have the ability to make money from that. Okay? Yeah, Gary, that's something you will never, ever hear from us. Averaging down is something that you never do. Now you can leg into a trade it is possible to buy more at a lower price if you do it properly. And the way to do it properly is that you have a fixed risk amount that you never exceed. So if you started off very light in the trade, it is possible, and it's one of the concepts we teach, that you can increase your share size lower. But if it were to stop out at any point, you would lose a fixed amount of money. What a lot of traders do wrong is they risk a fixed amount of money, their maximum, and then when it goes against them, they double down, and now they're risking twice the money. And they double down again, and now they're risking 4 times their money. That is the loser's way for sure, and that's something you never want to do. It's called averaging down, not what we want to do. Okay? So back on this trade in here. Entry on Nike, we had a powerful gapping stop, powerful picture of power. There were many entries that could have been done on Nike, and you may have said, well, why didn't you get in earlier? The reason was because this particular type of gap, and the way we teach gaps is very, very precise. There are certain gaps that would yield certain entries at certain times. And although Nike was a very strong gap, it was not as good of an odds to enter early in the day. If you notice that it actually opened up here, do you see where Nike opened this day? And it actually fell initially. So if you would have taken an early entry, it's very possible you could have stopped out of this, because that's what a gap like that will do. You have to let it prove itself to some extent. Now, this entry could have been possible, but it's one of those things I wasn't staring at every minute. But as the afternoon went on, and we actually found this, like I said, just kind of coming out of lunch around 1:50. It's on our list. We're watching these on charts, and we see the setup. So we actually have a setup happening within a setup, a very nice 5-minute setup. Really, 2 different types of setups. We have a major support play. We have a consolidation after what we call a 5-minute PBS on major support, and all that is happening inside of a stock that had a tier 2 bullish type of gap. You put all that together, and you get odds. You're going to get some kind of good pop coming out of it. Okay. Doc, as I explained, I normally, when I do things at Pristine, I'm normally taking stuff out off today. I couldn't do that for this presentation because I had to get the slides ready ahead of time for a bunch of reasons. So I did all my stuff Wednesday morning, and just went with these. And also, I don't have 2 logins here, so I can't even switch over and pull up any charts from today. But I'll tell you, this day they're looking at. I only had 1 loser that day. I had 1 half loser, and I think it was 6 or 7 winners. No huge trades, but good day. And today's over. I'm struggling today. I haven't gotten much right today. I had a couple targets this morning, and this afternoon I had 3 or 4 trades go under. At least. So I'm struggling this afternoon. And the reason was very simple, because we have I'm just telling you that. It's just the way it is some days. You're going to hear the truth. And the reason is simply because odds are, from a lot of different time frames, today, that bounce we got both this morning around 10, I'm looking at the chart myself, but the computer I'm on a different computer. The 10 o'clock bounce, and if not then, the bounce at 12, either one of those should have been the low for the day. What we're seeing is we're in this environment they call a stage 3 type environment right now, where it's much different than what it was prior to March, where things are very strong uptrends. We're now in a choppy market. And keep in mind, the big picture is still uptrending on weekly charts, but this choppiness on the intraday pattern is causing a lot of these red bars intraday, and something you should be aware of. Today's plan was, if we would have rallied this morning out of the open at all, I was going to be short. When we fell hard initially, the other plan was to go long on support, and today it didn't work. It simply didn't hold. And even though I had a short this morning, it didn't work, and most of my plays are going long on support as the market came down. And the market never held today. It's fallen, and it continues to fall, this entire time. So it is made for a tricky trading day today. So I don't have anything set up or pulled off from today. I couldn't possibly be that fast anyhow to be talking to you guys by 2 o'clock. Do you, Diana, do you teach setups, patterns, a complete market reading, technical analysis? Yes, do you teach setups, patterns of complete market reading? Yes, we teach reading of price patterns, Diana, price patterns. It doesn't matter at all, if it's the whole market, if it's stocks, if it's Forex. We teach Forex too. It doesn't matter what it is. Prices move in a certain way, and it really doesn't matter what the underlying instrument is. You know, some people want to change a moving average or change this or that, but nothing really matters. It doesn't matter at all. You can, you could take any moving average I have and exchange it for a different one. As long as I could get used to it for a couple of days, I wouldn't care. They're all relative things on a chart. It doesn't matter if you use 3-minute charts or 4-minute charts or 8-minute charts. It doesn't matter if you have a 13-period moving average. And we have standard things we use, and we use a 1, a 2, a 5, a 15, a 60-minute chart. That's what we use as standard. We use 20, 40-period moving averages. We use a 200-period moving average, and that's it. Moving averages are not magic. You can see on my chart there, they're just there for a reference point. If the stock is accelerating or pulling back, it gives you a fixed point that you can, read the price pattern from. But we teach the reading of price patterns, how to read price as it evolves, and understanding certain patterns that occur all the time. Okay? Does that make sense? Okay. And again, it applies. It doesn't matter what you're looking at, what a price action, or what chart you're looking at either. Does not matter. It doesn't matter if it's a 5-minute chart or a daily chart. The same concepts apply. It's not like you learn, a certain set of strategies on a 5-minute chart and then you get to start all over and you go to a 60-minute chart, because they're all the same. The time frames are all different, but the strategies that makes price move, they all interact within each other, and that's why I talked a lot about multiple patterns. That things happen, patterns happen inside of patterns, and you have to recognize that. It's if you take Trading the Pristine Method, our 2-day course, a lot of time is devoted to this concept of understanding patterns in a pattern. We call it in that class the micro and macro timeframes. But reading and understand prices, when you should be expecting things to be sideways, when you should be expecting them to be up or down, and then understanding the strategies that can help you to take profit from those moves is what it's all about, right? A big part of it for traders too is not just being able to point at a chart and see higher or lower, but actually being able to make money from the move. To be able to trust your skills so that you can actually get in at a spot where you make money, not get in at the end of the move, which a lot of traders do. They feel the stock's going higher and they wait until the stock has moved so much, so far, that by the time you get in, there's no money to be made. You have to have the knowledge and the confidence not to be able just to say, well, I think it's moving higher, but I think it's going to move higher if it goes over this number right here. That's going to be my entry point. Small targets imply a fairly large entry, doesn't it? Chris, it's all relative to your stop. I mean, a small target does not make you money, even if you take a lot of shares, if you had a large stop. If you have a 10-cent target, just for fun, but you have a 50-cent stop, well, your share size is going to be determined by the 50-cent stop, because you have to say, what if it stops out? My share size at 50 cents has to be within my loss parameters. And once you do that, your share size is set, and now your target is 1/5 of your loss, and that's not going to be a good trading ratio. So it's all relative. We actually term trades in terms of R's, R multiples. In other words, if you're working with a 20-cent stop and you catch a 40-cent move, well, you made twice your risk amount. You made 2 R's. So if you're risking $500, you'd make 1,000. If you're risking $100, you make 200, right? But true, if you have a very tight stop, if you have a 10-cent stop and you're risking $500, well, then you need to have 5,000 shares. And that may restrict you to trading some symbols that are trading too thin. If you're going to take 5,000 shares, the stock better be trading around at least 2 million a day or more than that, depending on how that stock trades. So it is possible that if you're trading higher risk amount and you have a tighter stop, that certain stocks may come off the plate for you because you're not able to get the share size you need, or you just have to understand you're going to be risking less on those. Okay. Our standard moving averages, Alan, on charts are the 20 and the 40 and the 200 that go on all the charts, basically. Okay. Now I usually leave the 40 off of the intraday charts, but it's on the longer time frames because there's a specific reason we use the 40 on there. Okay. And for capturing charts like this, I take the 200 off because it squishes the chart too much, or I have to expand the chart and the 200 goes off the chart, but the 200 is on there for me as well, even if you don't see it. Okay? Paul, what are your views on the time and sales, order book, delta, et cetera? Yeah, no problem option. I've, very, very, very strong view about that. And it's not a view, it's just a fact. I'm going to say something and then I want you to stop, don't yell at me for a minute, let me finish explaining. But the level 2 screen is almost completely worthless option. If you think you're going to tell where a stock is going by counting the total number of people on the buy side and sell side, you're sorely mistaken. What it is good for is that the very inside bids and offers are true. They're accurate because people are actually buying and selling those. So when you're down to a micro level, you're getting into a play, and let's say you're waiting for a stock to trade over a certain number, you're playing a breakout or something, you may use as part of your entry strategy that you want to see the bids really pile up because you might jump in, and then if those bids disappear, you might jump out again, right? It's good for that on a very micro level. Do you guys all understand, though, that the level 2 screen is worthless for looking at in terms of determining where the overall price pattern is going to go based on buying and selling? Let me explain it real quick on that, because it comes up a lot, and there's probably a great audience to talk to about it. If I am a market maker and I have to buy 1,000 shares, if I have to buy 1,000,000 shares of a stock, do you know how I do it? Option, how do I do it? I need to buy 1,000,000 shares of stock. What do I do? Do I go on the screen and type Goldman Sachs purchase 1,000,000,000 shares, go on the level 2 screen at the high bid at 1,000,000 shares? Is that what you see done? How I would go about doing it, and some of this, you may get shocked by this, but it's true. What I would do is I would actually take my name and I'd actually go on the sell side and I'd offer out 5,000 shares. No, I'm going to go act like I'm selling, but I'm not going to go with the lowest offer. I'm going to go a couple levels up, because what's going to happen, option, when I get close to actually having to sell, what am I going to do? I'm going to back away, right? I'm just never going to really sell. If I do sell a few shares, who cares? And then on the bid side, I'm going to go in anonymously, either invisibly or sit on ARCA, and I'm going to show 100 shares, but the order is going to say, well, it show 100, but by the way, if people want, I'll buy 1,000,000, right? So it actually looks like I'm selling, right? But I'm buying. And of course, the dum-dums that come look at the level 2 screen go, oh wow, look at this Goldman Sachs selling tons of this stock, let's all get short. Well, he's not selling it, he's buying it, right? And it's not, you guys can do it too if you wanted to. I mean, it's not unfair, it's just part of the game. But that's where you have to understand some of these things. That's where I talk about like education being so important. I mean, it could take you months to figure stuff like that out, just tons of little things like that. That's just, the game, it's not rigged, but the game needs to be learned or you're not going to win at it, right? If a group of people came here from some remote forest in Africa and they never heard of American football, I don't care if you put 11 of the biggest guys you've ever seen on the football field, they're not going to win the game because they don't know the rules, they don't know how to play, they don't know the strategies. It's the same thing in trading. People come to the market completely knowledgeless, completely blind, and say, well, this is easy. Anybody can do this, right? RB asks, I don't use TOS. I use Realtic. And I see some need to ask your broker. I mean, I don't think anybody wants to talk about that here. That's just an order entry question you can ask anybody, okay? Isn't that called spoofing? Well, I don't know what you call it. It's just called normal trading these days, Celso. And no, there's some orders you'll never see. I mean, the order book doesn't show those, the one you can buy. You can't buy anything for $10 a month that's going to show you this stuff now. You see it. You see the result of it. Guys, how can you tell the result? So Celso wants to know, well, if all this selling is going on, it's not a level 2 screen. How can you tell the selling is going on, guys? How do you know? Yeah, it's called the chart, right? Even though Goldman Sachs has a zillion shares on the offer, the price pattern is going to be going up, right? Despite that. So you look at what actually is happening. It's the whole secret of all technical analysis is where is price actually going? not where is it supposed to be going or where do we think it's going. All right, guys? It's about getting the odds in your favor. Most don't understand what it is to have strategy that gives you an edge. The strategy we teach at Pristine are in precise terms and can be found on any page in the manual as part of the Pristine method. Pristine method is a very unique and objective and precise way of reading price action. It's a way that can get you. We do everything from intraday right out to swing and core trading, long-term holding. Okay. But there are many who feel that they know technical analysis because it's easy and does not need to be taught. Guys, if you liked a lot of the stuff I was going over here today, and I'll probably have a couple of minutes left if you have any questions, but let me just sum up some things here. I tried to show you just some plays hot off the charts here from the last time I could capture them, and showing you what we look at Pristine in terms of having precise strategy and getting the odds in your favor. Okay. For those of you that like what I was showing you, we're going to be doing a class that you guys can attend for free. It's a 4.5-hour class that I'll be teaching. It's going to be April 25th. Right? Yeah, April 25th. It's going to be during the trading days time. We do it at different times from 12 to 4:30. It's called Online Trading Essentials. And we're going to talk about absolutely no selling whatsoever. It's just simply about good stuff that traders need to know. It's not going to be about learning strategies per se. It's going to be learning a lot of stuff that traders never really learned properly if they should have been taught, such as understanding risk-reward, understanding risk, understanding order entry, understanding different things that shouldn't be on a chart, a whole lot of things like that. So that's coming up April 25th. Mark your calendars, and you can sign up for that on our webpage at pristine.com. Okay? And also for those of you attending here, here's not telling you to buy anything, but I'm saying we'll give you something free. If you email support@pristine.com, you can have a month of Pristine Trading Room for free, 1 month free access. That's the room that I run every day, and actually where I'm there right now, except took this time out to do this with you guys. And you can have that a month for free, and that's a $300 value normally. So take advantage of that if you want to see what we do every day using the Pristine method. We're here to win you over and to show you what we do, not to try and just to sell you something. So email support@pristine.com, and very simple, and you can get that sent to you, okay? And I'd like to remind you, for those of you looking for a brokerage, our preferred broker is Lightspeed, and we are the educational arm for Lightspeed. So check them out if you're interested, okay? Guys, I have about 3 or 4 minutes left. I finished up actually 3 or 4 minutes early because I kind of allowed a little bit more for questions from you guys. You were easy on questions for all you here. Is there anything else you guys want to ask me before we finish up? I think I'm down to the bottom here and got all your questions. If I missed a question up above, please retype it at the bottom or copy and paste it because I did skip it. Good stuff, Pristine, but not cool, which is good. Okay. I think I got that whole thing, Diane, but I'm not sure, but I think I got it. All right. Any questions, guys? Anything else? I had a small list that I went over very quickly. Good. If not, I'll give you guys 3 or 4 minutes before your next presenter to get a drink or something. All right. Well, thank you guys all for being here. My email is up there. I'm paul@pristine.com. You can feel free to email me, and I'll return your email by May 30th. No, I usually get back in 2 or 3 days. But feel free to email if you like, if you have any questions about what I was here talking about. And remember, support@pristine.com to get that free month, okay? It's kind of light on the screen, but it's support@pristine.com. And just check out our site if you want to, okay, guys? There's the link right there. There you go. There's the link right there. You can just click on it. You don't have to worry about anything else. Okay, guys, thanks for having me today. And maybe I'll see you guys over at Pristine sometime. Have a great afternoon. Enjoy the rest of your talks here.
All right, great. Thanks, Paul. Appreciate you being here as always. And again, you guys are great partners. And like you mentioned, you can email support@pristine.com for your free month access. And again, they posted a link there as an announcement to access that as well. So thanks again to you and to Ray. I see Ray here in the room, and Kurt and Amber for helping to put this together. We appreciate your support. and look forward to continuing to have you on for more and more sessions. So what we'll do, we've got our next speaker coming up in about 1 minute. We've got a timer up there, so we'll let you go grab a cup of coffee and come back ready to roll for our next speaker. So we'll take a quick little minute break and then be back in 1 minute.